Hello, Smart Money 2 podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. And today I'm joined again with my good friend Doug Heagren. Hey, Doug.
Happy post celebration of independence. By the way, I saw a great meme this weekend. It was hysterical. Somebody posted, name one thing that Great Britain or England was good at, and somebody said creating more Independence Days around the world than any other country.
That's good.
They're very successful at making sure countries will eventually have a day to celebrate independence away from them.
That's good. I like that one.
Yeah.
I think there was a golfer. Was it Kevin Kisner? I don't know if his first name's right. Anyway, he went over and played in the British Open, and he wore a 1776 hat. I mean, just it must be tough for them for the rest of your life, for something you had no part of in your own country that you're proud of. You've got to deal with all these people shoving that in your face. It's like being a fan of a team that stinks, and you're still. Actually, it's like being a Red Sox fan up until 2000 and what was it, 6 or something, when they first won the World Series in a long time. It's like being a part of a team that hasn't won in the longest time, and you're like, yeah, I know. Yeah, I know. We stink. Sorry.
Yep.
Yeah, I know. The curse to Babe Ruth. Yeah, I wasn't live then, but that's all right. I know. Anyway.
Yeah, it's funny because what really cracks me up about what you just said about the golfer is the Brits love to brag about their British sense of humor. That if they got offended at all, then it's the biggest hypocrisy ever, because that right there is British humor in a nutshell. That's self-deprecation, absolute politically leaning. That would be a skit for Monty Python, hands down. So
love Monty Python. There's so many good skits there. We don't have time to go into them all, but yeah, no, I mean, you kind of bring up a lot, and I want to kind of pivot here into actual investment stuff, but there's actually been a lot going on around the world. Before we get into investment stuff, I want to touch on a few things. I mean, you had, you actually, speaking of England, you had we have a new prime minister now, I think.
Yeah, the Tories are out.
Yep.
The Tories got obliterated, which again happens about every 20 years in Great Britain. Very similar to kind of what has happened historically here in the States between Democrats and Republicans. All of a sudden, it's like, you know what? We're kind of pissed. Brexit was a failure, obviously, in their people's eyes. I'm not saying my opinion, because they basically threw them all out into the street corners.
Yeah, and I mean they've lost 2 prime ministers in the last 2 years. I mean that one woman lasted a week, and then Rishi lasted until now. I mean it's
it Boris is it Boris?
Boris. Yeah,
I mean that's 3 actually.
Yeah, 3. Yeah,
I mean, he was a disaster. I mean, he's best known for some stunt where he was hanging off of the bridge. I can't remember something he did when he was mayor of London. I mean, that's all people remember him for. And of course,
partying and COVID,
segregating completely or separating completely from the union. So
yeah, there were a bunch of things, but I'm not an expert in British politics, so I'm not going to pretend to be. But then, of course, we had the thing we all can't forget, which is the debate between the 2 presidential nominees. You had Biden and you had Trump, and
we can't forget, but one of the people in the debate might have. That's all I'm going to say.
I'll tell you, I don't like talking politics, but I only had one question coming out of that, which is, who's actually running this country? I mean, forget the politics, because there really was no substance of policies discussed at all, unless you agree that talking about golf is a policy, which I have to say was probably the worst part of the debate, was watching those 2 yahoos discuss golf. They're arguing about golf in a presidential debate. But besides that, I have to. The one question was, who's actually running this country? The next question is, are the Democrats really pissed right now that their whole party has basically gaslit them and lied to them for the last however many years? Because It wasn't the conservatives lying to them. People said, well, he's fine. He's fine. The conservatives are saying that, but he's fine. But now that you're saying he's actually not fine, and the news has been lying to you, your own party's been lying to you, how pissed are you? That's my question. And this isn't like politics. It's like I'd be so, and by the way, I'm not a part of any party, but like I'd be really mad if my party was lying to me and it wasn't a little lie. It was a who's running the country lie. It wasn't me. I mean, it might as well be Jill. Jill might be running the country for all I know. I don't know, and so that's the real question I have in my mind is who's actually running the country. And I got really scared after watching this. Like, holy crap, are we going to get somebody in who remembers what their own name is? I mean, the amount of like shit talking that Trump did to Biden, and it was just well done. I have to give him credit for that, but I think that's his natural state is shit talking. But I would have liked to have seen a little more discussion of policies in debate. So it was funny, but after like the first 10 minutes, it just sounded like more of the same for the rest of the time. But the first 5 minutes scared the crap out of me. I'm like, wow, you couldn't drug him up more than 5 minutes before he lost his train of thought and what he was talking about and wanted to beat Medicare. Like, oh my God, that was scary.
And the only thing more I'm going to say on this is, I mean, I wish they could talk more about actual policy and things like that. Now, granted, this was the vice presidential debate, but I mean, it's been going on forever. It goes back to when Lloyd Benson and Dan Quayle, like, hey, I know Jack Kennedy and you're no Jack Kennedy, right? There's always been this mudslinging. But I want to say one thing, and it's not. You said people should be pissed that their party's been gaslighting them for this long. I gotta say back, shame, fool me once, shame on you, fool me twice, shame on me. I'm gonna take it a step further and just say this. Why would you be pissed? It's been right in front of you. I mean, I'd be pissed at myself for being this ignorant. It's been obvious for at least the past 2 years in almost every political or a public, example, how many gaffes there's been that clearly something's not right. Now, how bad it is, sure, maybe they've been gaslighting you. And sure, and again, this is not an anti-Biden. A lot of people could legitimately claim he's had a great presidency. I mean, stock market's at all-time highs. People are employed for whatever reason you want to give credit to, which we always tend to give credit for the wrong reasons to the wrong people for everything, whether good or bad. I mean, you can't argue. It's hard to argue that it's been a bad duration of his presidency. Who's running it? I guess most Democrats and most people that believe it would say, who cares? But if you actually believed he's been 100%, all of his faculties working at 100%, then I'm sorry, shame on you, because it's been obvious every time he's been in front of a camera. So
yeah, well, we're not here to piss off all our listeners, Doug. So
that's why I said, you can argue positives there, whatever the case. So
let's dive into some investment stuff. We're actually keeping this short in light of the holiday, just because we got some holiday stuff going on. I wanted to keep this a little short, but I did want to tap into some things, and I did want to segue the talk of politics into actual stuff, which is politics don't matter. Now, if you saw the disaster, the Hindenburg Titanic that was the presidential debate, you'll notice that the stock market didn't care. So I'm going to share some performance.
Does it ever anymore? Sorry.
Well, no, but here's the important point that you can take away from this. It doesn't matter. Here's why it doesn't matter. If you look at that disastrous debate, if you look at when Trump got elected and everyone thought the world was going to end and they thought Hitler took over, and of course, none of those things happened. And they still think that that's going to happen if Trump wins. I'm like, you know what? You had 4 years of him. Did the world end? No. We had 4 years of Biden. Did the world end? Not yet. No, probably not. So it doesn't really matter. And I think what matters is if you really want to, if you're stuck in this reinforcement loop that if so and so wins, the world's going to end. I remember when people were talking, when conservatives were talking about when Obama was running, and oh my God, if Obama wins, it's going to be the end of the world. If Biden wins, it's going to be the end of the world. Trump wins, it's going to be the end of the world. Like all of these, it's so ridiculous. If you're caught up with that, you have to find a way to pull your head out of it because it is really dangerous and it screws with your head. You can't listen to any of this stuff. But here's the reality. Politics doesn't matter when it comes to the markets. It might matter to to your rights. It might matter to you socially, but when it comes to markets, it really doesn't matter. And if you want to know if it matters, watch something like the debate. Watch something like a president getting elected and see what the stock market does. Because if the stock market does anything at all, then, I mean, if it does, it'd be very slight. But that you should probably be concerned with. But if it does happen, it probably has nothing to do with the president.
Hey,
Right?
Kirk, I'm going to go back to a graphic that we have and we posted a couple weeks ago. During the years of unified government of both Republican, which was 13 years, and this is from Stansberry Research, and during unified Democratic, which has been about twice that, it's been 34 years, a little more, 14.52% return average under Republican or Democratic unified control. Average S&P 500 index annual average return, 14.52. Exact. Again, we questioned some of the data here, but based on the research, exactly the same. It didn't matter.
Right. Yeah, I was getting to that. Doug jumped ahead of me a little bit here. So I would just want to show a few things. So yes, there's 100% correct, and that's really the point, right? Is that returns don't matter who's in government. Now, if you've got a really bad setup, then fine. But generally speaking, it doesn't matter. I want to run by this. I'm going to get into the indexes. Here's the year-to-date performance for commodities. And I brought this up because it also has some indexes in here too. But outside of cocoa prices, which is up 187, almost 88% returns this year, just for cocoa, right? You got orange juice up 36, you got coffee, silver's up 25%, gold's up 11%. By the way, precious metals. Here's something. If you're looking for good investment ideas, and we don't give investment advice in the show, and don't take this for investment advice, but if you really want to look for opportunities, we talked about the opportunities in cocoa a bunch of weeks ago. But if you look at precious metals, that's a really interesting space because really nobody is talking about this. Virtually nobody's talking about precious metals, and yet they're silently starting to take off again. Now, if you're looking for a diversifier, it's a really interesting diversifier. I love the precious metal space because of the amount of debasement that's going on in their currency, and because of the fact that we've had a bunch of inflation, and the fact that we're printing a bunch of money. All of that it should lead to higher gold and silver prices. Now, if they confuse you because you're like, well, wait, they just printed money and they're not going up today, you're missing it. Look at the bigger trend, and you'll notice they're starting to take off. The trend is higher, and if you're looking for the opportunity to get in, it might go sideways for a while till probably the end of the year, but it should continue to go higher, would be my guess. Now, if you look at the S&P, it's up around 13.72%. The Dow, whoa, here we go. The Dow is only up 2.42%. Well, really? The Dow? That's interesting. Oh, wait, the Russell 2000 small cap index is down 1.76%. All right, now here's the takeaway. Most people are looking at a single index. Now, if you're watching CNBC or like you're watching some corporate news channel, you're gonna see a lot of talk about the Dow, not the returns, but the numbers, because the numbers are the biggest in the Dow, right? And so people naturally talk about the Dow because, oh my God, it's up 1,000 points, and that's like 1%, right? So they love talking about that. But realistically, the Dow has gone nowhere this year. The small cap index has returned a negative return this year. Only the S&P, well, actually the Nasdaq's up 17. Sorry, the Nasdaq's up 17.65. So the S&P and the Nasdaq have done great, and the Dow has been lackluster, and the Russell 2000 has been negative. Here's a takeaway: all indexes not created equal, and because of the way they weight stocks in the S&P and the Nasdaq, they've done really well this year. Now, because of the fact that NVIDIA, and I'll get to this, NVIDIA is returned like 100 and some odd % returns this year, that has overweighted the returns of the index. And most stocks have actually been flat this year. So here's the thing to understand. Most stocks are not taking off like the indexes. So if you're in individual stocks, cross your fingers that one of them is Nvidia and the other, and at least some of the others are the Magnificent Seven, because that is what's doing well. And now Tesla has been lackluster this year, so it's not really Magnificent Seven. But if you look at the returns, that is mainly what's driving the index. Now there are some others; it's not just that. But if you look as a broad spectrum, most stocks are actually not doing all that great. So um, this is one of the reasons why I think indexing works right now in this environment, because taking a single stock risk is really dangerous. Now, there are times where taking a single stock risk actually is to your benefit, but if you're just guessing on the Magnificent Seven, it's a bad investment philosophy. It just has worked in the last few years. But going forward, I think you could potentially yourself into trouble. It's better to pick good stocks at good prices, or as I think it was Charlie Munger said, pick what do you say? Don't pick average stocks at great prices. Pick great companies at average prices. And so even if you're overpaying, it's much better than trying to cherry pick the bottom of the barrel stocks that aren't doing that well. So I just wanted to share this because I think it's really important to understand like what's doing well, what isn't. Natural gas has not done well this year. Some of the ag commodities have not done well. If you look at crude oil and Brent oil have done really well. Coffee, the Nikkei, and yeah, that's pretty much it. So anyway, I just wanted to share that. I thought it was really helpful to understand kind of what's going on in the world beyond just the stuff you see every day. But anyway.
This is a public service announcement. Hi, my name is Kirk Chisholm, and I'm with the government, and I'm here to help. Doesn't that sound reassuring? Well, let's talk about how they're helping. The government needs your help to make our money worthless again. PPP loans, student loan forgiveness, helicopter money. Let's keep the party going until our money is totally worthless. Don't think it can happen? Sure it can. Just ask Zimbabwe, Venezuela, Greece, Germany, Hungary, Greece, Yugoslavia. Did I say Greece? As a loyal listener to their show, I want to give you free money. I'm giving away free money in one of these hyperinflationary currencies. Go to www.moneytreepodcast.com/free money and follow the instructions to get your free gift. I have a large audience and only a limited supply of these currencies. I'm not the Federal Reserve, so I will run out at some point. Make sure you get yours before I run out. Go to moneytreepodcast.com/free money. Follow the instructions and get your free money today.
Doug, what are your thoughts here?
Well, just I was kind of running a chart on kind of the year to date, looking at things. And again, I mean, we've talked about this before. The biggest leaders by far and away continue to be kind of concentrated in a couple of different sectors, especially technology, right? I mean, NVIDIA has absolutely driven the performance of the market. You've got Microsoft and Apple and Google are all, and Apple really for a long time was lagging until they announced, oh hey, we're finally going to jump into the AI, and then it boomed forward. But if you look at industrials, if you look at real estate, a real laggard across the board this year. Healthcare is kind of mediocre. Interestingly enough, the financial side of things, which of course Berkshire B falls into, has actually done fairly well year to date. JP Morgan, kind of the leader in that space. But again, you go back and look at across the board in financials and look at those unrealized losses that we've been talking about. All just because the stock price has been doing really well doesn't necessarily mean that is all is well and good in the world of these sectors. Looking ahead again looking at the current price to earnings, which again is very simply, how much are they actually earning based on where their stock prices is. If you were to look at the S&P 500 across the board right now, other than again some of the financial sector, maybe some of the energy, almost every category especially in tech, but consumer, cyclical, communications, they're all in the red. What is the red? PEs of 30, right? So the price is extremely high for what they're actually doing. Now, what's interesting looking forward, if we look at forward PE, we start to see a little bit more green there. So they're starting to see, price to earnings actually look a little bit better in the communication sector, financial sector, energy sector, going forward. But guess where they're still going to see extremely high priced earnings, which is not unusual for the category, is technology. So, again, it's a reminder that, that a lot of when you talk about picking stocks individually, you start talking about the indexes, it's a reminder that, and again, because of the way, especially you look at the Dow 30, industrials, you got 30 stocks. It's an aggregate of exactly what their stock prices are and their market caps. But the S&P 500 works differently. And the S&P 500 is always going to be relative performance to the highest momentum performers within it, which means that, you don't have to sit there and try to pick, I think this is going to be the best stock. I think this is going to be the best stock. Should I be holding NVIDIA? Guess what? If NVIDIA is doing well, S&P 500 is going to be performing well because of how much it's performing. Now, again, we've talked about how that concentrates you into the relative performance of 7 to 10 stocks. Yes, but those 7 to 10 stocks move, and sometimes those 7 to 10 stocks are going to be different than other times, which is why for the average investor, it probably, again, if you're not going to get help and actually have the ability to really track what's going on between fundamentals and technicals within individual stocks and how they could potentially perform. And even then, the experts are wrong more often than they're right. The index is probably the best way, a broad basket or following the index is probably the best advice for most people out there. So that's why, again, picking individual stocks, probably going to be more of a loser than a winner, especially when you look at a lot of the different fundamentals that are out there and technicals that are out there and how quickly that can change between what's going to be a great performer to an underperformer. So that's just a couple thoughts on that.
Yeah, and we're gonna wrap it up here in a few minutes here, but I just want to make some kind of final thoughts here. There are some good ideas out there, but I think what's interesting is if you're in the boat of just the market just goes up forever, or if you're in the boat that the world's coming to an end tomorrow. Here's some takeaways. We just ended the first half of the year. The S&P did great. And the NASDAQ did great. Primarily, a handful of stocks did great. But if you saw that prior screen, I'm going to bring it up again. Really, what you'll notice is that, let me see if I can bring it up here. Okay. Really, what you'll notice is that, outside of technology, which obviously is in a league of its own, in each of the sectors, there's one or two really great performers, and the rest are kind of laggards, right? So if you look at consumer cyclicals, Amazon. Everything else pretty much just lagged. Although Chipotle looks good in the restaurant sector, but most of them not so much. Look at healthcare, Eli Lilly. The rest of them not so much. If you look at industrials, GE, great. The other ones not so much, right? If you look at consumer defense, you've got Walmart and Costco. The rest, kind of average. And I'm not saying the other ones didn't do well. I'm just saying if you look at the coloring, because that's one of the obvious things here. You're going to notice that it's really, really like one or a handful of stocks that did well. Now there's some like financials where it's kind of average, which is okay, but you'll notice there's a lot of red there. So I just want to point that out because most people think that, well, everything's doing great. Now, if you look at, I don't know what you just sent me, Doug, but that's the PEs. Okay.
PEs, yeah.
I'm just going to share this. This is the PEs. Now, I think this is really important because if you're looking at all this, now PEs, as they say, sometimes the stock market can remain irrational longer than you can remain solvent. So if you think things are going to, if you think things are not going to do well because there's a high PE, you're missing the boat. Don't necessarily look at high numbers as an indicator that things are going to fall. That's really not how the market works. The market doesn't fall because it's expensive. It falls because there are no more buyers. So if everyone and the last person has bought, then there's no one left to buy. That's when the market starts to drop because there's only sellers. And so if you look at the peaks, there's usually some reason why it peaks out. It's usually because, all the energy is out of the market and then it just drops and then people sell and more people sell and it feeds on itself. Just the fact is expensive doesn't cause a market to sell off. So just because we see this, like Nvidia at 73, okay, who cares? Like the market keep going higher. And I'm not saying that I like it because I don't. I think this is scary. I don't like it at all. But you should know the market could go higher for the next 5 years. And it's totally irrational. And you might think, well, there's a conspiracy afoot to keep the market higher. Could be. I don't know. I don't care because I don't know how that's going to help me as an investor, right? We talked about politics. Politics don't matter when it comes to investing. Republicans, Democrats, you're getting the same output, right? No matter who's in office, you're getting virtually the same return as Doug alluded to earlier with the stat that we brought up last week. You're going to get the same returns. So it doesn't matter. So don't focus on the politics. Focus on your investing. Have a solid investing strategy, whatever it might be. There's good and bad investment strategies, but most of them are just a different perspective on what you think works and doesn't work. But find a strategy that works for you, stick to it, and do it over and over, and compound your returns so you can make a lot of money for yourself. We're gonna have to wrap it up here in the interest of time. So Doug, let's take us home.
Yeah. So if you have any questions, kind of about whether or not you have things in the right place, and when I'm talking about things in the right place, I'm not talking about stocks you buy or investments per se, but ultimately, when it comes down to it, there's basically 6 major risks that people have to their financial health. And if you want to have your financial house in order and keep it that way forever, you got to understand those risks. Those things are going to be markets, which we just talked about. Those things are going to be inflation, which is going to be the erosion of purchasing power. It's going to be taxes. The government, one thing the government can do is they can vote to change your taxes on you. We've got some expiring 2025 tax cuts. Don't know what's going to happen there unless they agree. You've got longevity, outliving your assets. You've also got things like basically liquidity events, and that's a big one that we work on with college planning. Or so it's foreseen events like coming up with a lot of money to purchase a house or college, or unforeseen like healthcare. So again, those risks matter to some people more than they matter to others. Which one is your concern? If you have any questions about that and want to find out where those risks are and how to mitigate the risk to yourself, get some information. Come check us out at mergentgroup.com, MERGENTGROUP. So mergentgroup.com. If you have questions on the liquidity side for college, mergentcollegeadvisors.com. Check us out, get some information, because again, those risks, that is what puts your financial house out of order. And that can happen anytime. The one thing we plan for is the certainty of uncertainty. If you want to make sure that you have financial peace, just take a look at those risks and see what you can resolve. And again, markets are one of them, but there's a lot of other ones as well.
Great. Well, thanks for coming on the show, Doug.
That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.